Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as stockcharts.com. So this week the market is buzzing with the sizzle of software. Software has been on a roll for roughly 6 weeks. It's really taken off and been soaring. I've been pointing that out to the members on my website as well. But I think the bigger thing here is to try and make sure that as this market changes, because you'll see big changes in the charts, you want to be aware of what's happening and how to find what's moving next. So that's what we're going to cover off today. Software names have been leaping higher. So whether it's software or whatever, uranium companies are also moving today. But we're going to take a look at how to create a list of software companies, how to see the strength in the charts, where to look for opportunities, I think, based on the sorting, and hopefully that'll help you out. So first of all, I want to give you a bit of a backdrop around what's going on. What I want to cover off is this in the market. Each week I try to keep track of different parts of the market for momentum. And one of the things that I use is up 10% on the week, up 5%, down 10, down 5, down 10. And so here you see in the end of July, up 10% on the week, there was 163. And then it jumped up to 287, and then it was declining for a couple of weeks. Now 10% is a big move. But look what happened August 27th. We literally had a tenfold pop in the number of stocks, up 10%. But compared to the number of stocks that were down 10%, this was literally a 15-fold increase. Crazy. Now, the week before that, we had so many more stocks down hard on the week, even though the indexes were higher. So really an odd week. So the indexes didn't reflect any of the pain that was going on underneath the surface. We had, let's call it, just if you group these two numbers together, 1,400 down big, and we had 200 up big, and yet the market was flat. So if you had a broad portfolio, the odds are you still were getting hit. Well, one of the things that was happening this week was the percentage of stocks up 10%, which had been declining, all of a sudden jumped, and it was 20 times more than the stocks down 5%. So when I see big change like that, that's telling me that the market is starting to broaden out and people are more interested. Now, perhaps it's a final high and we surge to the top, but I think otherwise it's more bullish, especially when we haven't been able to do this for 3 months, that we finally take a pop. And when we look at the NASDAQ, it's been churning sideways roughly 2 months, and it's just started to break out. So I'm taking all of this information, so the percentage of stocks, or the number of stocks up 10% on the week and up 5% on the week, as being such a big bull push here that we're kind of getting a thrust, a bread thrust or an initiation thrust. And the new lows on the number of stocks hitting downward just says to me there's more confidence coming into the market, and this is one way to look at it. So anyway, that's kind of my big view right now. I want to be bullish. So first of all, we're going to go and we're going to start off at the members dashboard. I want to make it so it's very obvious for you how to go and get this done. So we're going to click on new scan, and this automatically defaults to these lines. What I would do down here is I go down and I want to pick different sectors and industries. Here's the technology sector. I want to go down to the software within that, and I want to hit add. When I do that, that's going to put the line here. Now it's going to give you everything from a 30-cent stock and on up. I've trimmed all this out, and I'll just show you the scan that I trimmed. I put the group up at the top, and that makes the scan very short. It's not going to search all the stocks in the world for a close above $5. It's just going to search the software stocks and give it to us in a list. So now that we have this list created, when we run this scan, We need to put it somewhere so you get your scan results. A couple of things are going to happen here. So one of the things that you want to make sure that you're doing is you need to organize the work so that you can find it the way you want to. So I'm going to get rid of the exchange and the sector and the industry. Those don't really matter to me. If you wanted to keep the small cap or large cap, that's fine. We're going to keep the close and the volume, and we're going to use that volume to help us. So what happens here is I would click on the volume and I would try to get the largest first. And then the same thing with the scooter ranking. I want to get the largest first. And now I want to put that into a chart list to work with. So if you don't have one set up, you're going to store these results in a new chart list. In my case, I'm going to replace an existing chart list. Now I'm going to scroll down. And again, you can change this. You can do this scan every week, whatever you want. So here's software 2021, and I can click preserve sort order, and it would keep it like I've done it. Let's just say that I forgot, and I just hit the OK button. It's still easy to go back and do this. You can do it before or after you save the scan. So anyway, so I'm going to click into volume here, and so we've got the strongest volume stocks at the top. Here's the scooter ranking. The reason I want to know the volume is if I go to the very bottom of the list, a lot of these don't have a scooter ranking. They're either too new, or so they don't have enough data history, or their market cap is too small and they don't make it. But there's still some nice chart shapes in there. So I want to point out that at least by using volume, you're still going to find something that's got price action associated with it that's in the software sector that might not have a scooter ranking yet. Okay, so with all of that, then what we do is we scroll to the bottom of the page, now that we've put it in this chart list called Software 2021, and we're going to number it in sorted order. So as I've done that, now it puts a number on the front of all of these, and I can go through and I can look at these charts to see how I like them. Now, one of the things you'll find is these ones that have high scooter rankings have already run a long way. That's not a problem. That's a good thing. But here's, this support literally gapped up, pulled back, came down to the 200-day moving average, and then took off and literally went vertical. So this has been a pretty nice chart. If we go look at the next one, here's Marin Software, and this one I particularly like. It gapped up, and now it went sideways, then it gapped up again, pulled back, and now it looks to me like it's trying to base here after that big run. And obviously there's some interest showing up on this thing, 350 million shares traded. So some people are watching this software. I don't know what it does. I just know the chart looks pretty interesting. And I would say if it can hold this $6 breakout, even if tomorrow it could make a higher high, then I'd probably want to get in and put my stop relatively close because it's very volatile, right? 28 to 4 in a month. So I would try to make sure it stays in this uptrend. I like what I see. This little pullback here just from 2 days, that looks pretty good. The stock's obviously got some enthusiasm. So now we've seen some really strong stocks. We can also view this view all and just scan a little bit faster. But what we're going to find is all these ones at the top here have had big runs. And so maybe those aren't your favorite, but here's Asana Software. It's starting to level off. Nothing wrong with that. The scooter ranking is still strong. You can see the PPO momentum is pulled down, and then perhaps if it could start to turn back up again, it would break out of this trading range and take off to the upside. Lightspeed, this stock recently just broke out from this, I'll call it above $90 or above 85. It was 82 over here. Anyway, started to break out. Now it's been on a run. It's up, just in the last 2 weeks from 90 to 110, so a $20 surge. Very, very nice move. And it looks like it's just getting started on the big picture, so that's pretty impressive. Here's Fortinet, and it's been just unbelievable. Here's Atlassian. This one gapped up and it kept running since then. Very nice chart. Here's Cloudflare consolidating sideways after a big move. So it was above 90, and again, it's starting to break out. I don't want to cover off all of the stocks in the area. I just want to show you that these are some of the stronger movers. Now, what you'll see is the scooter ranking can stay strong long after the stock has, I'll call it, stopped its exceptional rate of acceleration. That's not a problem, but more importantly, is when the scooter ranking starts to dip, it can tell you that at least the love for the stock and its rate of change has started to change. So I like to put a blue line on my scooter ranking at 75, and the idea being, if you're in the top 25% of the stocks, that's a pretty good place to look. And then the second component of that, when you're not in the top 25%, you're just average. You're around the S&P 500, and so you're not really moving up that fast. Now on this chart, I have two different indicators structured together. I have my relative strength compared to the S&P 500, and I also have my scooter ranking. One of the things that I find is when your relative strength starts to break its uptrend, you might be losing momentum on the stock because what was outperforming no longer is, and that might be a nice place to at least take partial profits or profits depending on your long-term growth outlook for the company. But the way I've put this on my chart is I've said to put it behind the indicator, and it'll put it behind whatever indicator is right above here. But if I wanted to say above, I would do that. And now the problem with saying it's above is it's going to keep compressing. I've set the dimensions for my chart size, specifically a width of 1250 and a height of 750. So it's going to compress that. If I added 10 more indicators, it's going to pile them all in and keep the height at 750. One thing that does happen here is when I change that setting of where it's located, it also changes the opacity, thinking I probably, if it was in the background somewhere, it probably wants to go back to full. I don't really like an area chart at full brightness because it's just too rigid, so that's why I always set it at 0.4. Anyway, the idea being, now I've added another inch of real estate here, and I'm shrinking everything else down. The scooter ranking and the relative strength are both important pieces of data, but in general, I can look at them on the same panel, and that way it allows me to get extra height. So I'm going to go back to looking at it the way I had it before with both of them. But think about that blue line as being for the black SCTR, and that the purple has nothing to do with this blue line. It's just a separate way. But by compressing them, obviously each one of these other panels get larger. Okay, so that kind of explains how I've set up my chart. And again, relative strength to the S&P 500 is important. The PPO or the scooter ranking tells me how strong a stock is compared to its peers. So much like a sports ranking where Seattle Seahawks are outpacing the New York Giants, who has more wins each week. So as we go forward, you keep track of the winners. And that was a joke, by the way, about the Seahawks. So the scooter ranking actually tells you who's got the fastest price action. And so Cloudflare has a scooter ranking of 98.2. So it's been performing better than 98% of the stocks over the calculation period of the scooter ranking, which you can find in Stockcharts chart school. Okay, so we roll through. One of the things you have to watch for or wonder about is stocks that are really strong that have pulled back, and how do you want to buy them? So as an example, here's Paylocity Holdings, and you can just see it basically ceilinged or hit resistance around 220. Scooter ranking started to weaken and it fell down. Got down to very oversold, down around 10%, and then started to turn back up again. So we're going to talk about that 10% level. Actually, we're going to talk about 25% level and this 75% level and why I think it's important. So those are just helpful places to look with the scooter ranking, and you can use those to help judge. Now, we can use traditional technical analysis here where you draw your downtrend line when it's starting to break out. You kind of want to get back on board. Or you could have used a scooter ranking improving within a strong sector like software. Either way, lots of different things. So let's go back to the table of stocks. And I want to show you some of the differences when we go down to stocks in around this 75% level. And I'm going to take eGain because it's right at 75. And when we look at this stock, one of the things we see is it hasn't had this big uptrend yet. Some might have, and I'll talk about that in just a second. But what you can see is the stock was pretty beaten down, not much going on. Now it's starting to improve, and now the price action over the period of the calculation of the SCTR, which has 20-day, 200-day, 50-day, 20-day, 14-day, 3, it's got a whole bunch of different time frames wrapped in there with weighted structure to it to help kind of find stronger stocks. Anyway, the big point I want to make here is this one sitting right at 12. A breakout here is going to be a new 6-month high. Stock starts to roll, and again, it was a pretty strong stock historically, so perhaps it's getting ready for its next run. So that looks particularly exciting to me. One of the other things you'll find, one of the other things you'll find in around here, and I'm just going to go pick Oracle Corporation, and there's a reason for me to pick it. But when we look at the stock, one of the things we see is the scooter ranking still is in around 75. The stock is in a much different trend than the prior chart we just looked at for eGain. Part of the reason that Oracle's chart, while it may be in an uptrend, still has the same scooter ranking, is that while the chart has moved, the automatic scaler on the chart controls it from $50 to 92, and it will always take the lowest point on the chart and the highest point on the chart and change the scale. So in this case, the scale is moving, I'll say $2.50 over this period of time. For really fast stocks, so if we go back and we look at some of these ones up near the top here, Bill.com, the scale is $10. Okay, and so the idea being the scooter ranking, while Oracle's chart is going up, it could be going up in 10-cent increments, 5-cent increments, $1 increment. This chart's going up in $10 increments. That difference is what the scooter ranking is picking up. It's picking up the speed of the move, not just the fact that it's in an uptrend or I'll call it a particularly normal stock. So it shows the stock being in an uptrend. If you think about the S&P 500, typically its scooter ranking, if you look at SPY, is around that 75 level. So anyway, the stock has been underperforming for a long period of time, started to perform better lately, and is just jogging sideways. So it's still okay. Now, maybe as Oracle breaks out above this level, you want to get it, or you'd like to buy it close to the bottom of the range. You still think it's ready to make its next move. Okay, so those are different ones. Now, if we just quickly scan, so Workday just had a great announcement the other day, and it took off to the upside. Obviously, its scooter ranking was pretty weak, and then it took off significantly. But we see that same sort of trend analysis that we saw on Paylocity, I think it was. We have this downtrend. It finally breaks out. It's moving above the 200-day moving average. Then all of a sudden gets hit on volume, shoots up, and now the scooter ranking is up around 75. Now, the interesting part about Workday, beautiful move here from 230 to 275. The real problem is the stock, if we look at this black scooter ranking, has underperformed its peers for most of the year. So it's been a big software name, but the stock price action hasn't really done much. So now we finally get a gap up. Is it something we like? That's a good question. You have to decide how to play it. The breakout here to new 3-month highs might have been a reason to pick it up. But again, the stock hasn't really outperformed its peers. Okay, so as you look through just scanning over these charts, here's Ping Identity. That chart's just breaking out of a 6-month base. That looks pretty nice. Here's eGain. We already talked about it. MicroStrategy. You can just see these stocks haven't broken out yet. They're kind of in a range rather than ripping. Here's open text. It's moved up, but again, it's gained about 50% over a 1 year period. Nothing to sneeze at, but these other stocks are up 2, 3, 400%. Here's Viva. Took a big run, gave us a nice pullback, maybe a chance for a little bit of a consolidation and an entry above that. So that looks pretty good. Snowflake has been one that's been talked about, and this chart looks a lot like the Palantir chart is currently, but before the breakout on Snowflake. So again, just drawing a horizontal line, all of a sudden Snowflake starts to improve. If this chart's actually going to finally take off and run, it's just getting set up. The scooter ranking's kind of the best it's been since it started. So that looks pretty good. Anyway, the idea being, if you go and look around this 75% level, and it could be 85 to 65, but just picking that middle group, you want to try and find stocks starting to outperform. If you think about the overall stock market and divide it up into low, medium, and high-performing stocks, the S&P 500 is kind of the middle of that range, and it actually ends up being 70% of that range. It's up. The scooter ranking for SPY is around 70% typically. So you can just see it holds in here. It's been tracking up around 90 as the rest of the market was weaker, but just a long-term reference point. What I think is better here, when you look at Palantir, so this stock, I think it's the early version of what Snowflake is doing, and it's been consolidating for a while right around this 25 to 27 level. If it starts to break out, the volume is huge on this thing. It trades 50 million shares a day. If it can actually finally break out again, this is a pretty nice place to be aware of the change. And again, our scooter ranking in this case is 62%. So let's go look at scooter rankings down around 25, because I mentioned that those are worth looking at. Whoops, got a little bit too much scrolling. Sorry about that. So here's Blackline, and I'm not picking up any particular name. These stocks are particularly weak. The scooter ranking is just sitting here. If you want to find something, this stock was obviously outperforming really well, and then you'll see lots of these with a February high in the technology software space and haven't recovered yet. So maybe they will start to. So maybe you're looking for a PPO to start trending higher. You're looking for a downtrend in price action to break, horizontal support resistance, whatever you'd like. I just think in around this 25 level for the scooter ranking, if it starts to improve from here, it goes from being an underperformer, and again, the scooter ranking is across all the sectors and industries. If it can start to take off again, then that's a pretty good place to look. This chart's down and out, but we can also just look really quickly using the scan tool here. That chart's gently pulling back. Here's Blackbaud. I'm not trying to tell you how to pick them. Maybe you're not a bottom fisher. Some people are. This is one way to do it. Now, here's Twilio. Lots of people really like this name. It hasn't done much, right? It's flat on the year for the most part. But there's a lot of people calling for this stock to be one of the great ones. Well, if it's going to do that, it'll eventually have to be get a scooter ranking back up where it was. And it's consolidated for the year. So let's say it starts to move above the 200-day moving average, breaks this downtrend in momentum, starts to turn higher. Maybe it's a reason to pick on the stock. Or do you just want to wait until it breaks through good old 420, the Elon Musk number, but breaks through 420 and starts to head out. And again, this stock topped on the February highs with all the rest of the technology names. So that's another way to approach it. It's just an area to try and find within a strong industry group, a stock that might have pulled back and consolidated, and then you can go find it there. The last group I want to talk about is when they don't have a scooter ranking, and we're going to just click on a few of these stocks in here. Again, it's either because they don't have the volume or the market cap, But here's DD, priced out, let's say $14, went up to 18, now down to 8. Somebody thought it was value on its opening days, traded 250 and 300 million shares, pulled back hard. It doesn't matter what the company does. It could be Chinese, could be American software. I don't really know or care. What I want to know is what's the price action, and as it starts to turn up, yeah, go do your due diligence on the company or whatever. But you're still looking for a chart shape of something going up. This doesn't have it yet. If it was about to, that would be good. But look at the volume that's on this stock. It's pretty strong. So it makes it worth keeping on your radar. Here's Robinhood. Whoops. We all know what they do. Gamification of trading, accused by the SEC or something like that. That's a joke. From $32.50 to $85 and back. Now the question is, can it start to base here and turn higher? At least it's on your software radar. It won't show up under your scooter ranking because it doesn't have history. And it's obviously got the market cap. Now, Coinbase is in here. Same thing, really strong, earnings potential, revenue. It's just starting to break out of this base that it built after a strong IPO, came down to around 260. If it's going to hold here and start to take off to the upside, that's just a beautiful place to get on board. So, again, the way we got there was using the volume scanner to try and put strong stocks or stocks with large volumes in this chart list and use that volume to help clue us into at least where people are paying attention. So again, we can use the scanner here. That chart looks pretty broken. Here's Full Truck Alliance, Doximity. Chart continues to head higher. Marqeta, pretty volatile both ways. SharpLink Gaming doesn't work for me yet. Here's C3 AI. Now this chart had a big name, big IPO, came out. Very, very popular. Call it $100, went all the way to 180, double topped at 176, slid down, and again, February high, you see it on all of these charts, but has not recovered yet. So the real question is this company busted? No, it's probably was overpriced to begin with, but down here at $50 compared to 200, it probably looks a little better. So if it can build a bit of a base here, maybe just a breakout over 52 or 53, the prior highs, and start to turn up, that gets your interest. It is starting to break this big downtrend, so other technical clues can be in there. You have to pick the ones you want. But again, it's not going to show up on the scooter ranking, so use the volume to try and help you find it. Okay, last but not least, hopefully those give you some ideas of the way to manage that. The one thing that I think is important here to be aware of is the NASDAQ. If we just click on the NASDAQ chart. So the NASDAQ had consolidated really from the beginning of the year. It was stuck under 14,000. Then it ran up, and for the last few months, it's consolidated around 15,000. We can see that on the daily chart, just kind of stuck in this 2-month trading range. Last week, with all of those percentage breakouts in stocks moving up big, 5% or 10%, this is just getting started. So to me, it looks like we're just starting the next leg. And I know after a 10-day move, we think we're done. But look at this big move we had from May to July. Anyway, consider that. The chart looked pretty interesting right here to me. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern. You can also see the recording on Stockcharts TV YouTube page or Stockcharts on demand. Thanks for taking the time. Have a good week trading. Bye-bye.
Hey, Grayson Rose here with Stockcharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.